Many of the big Canadian banks are set to report quarterly results this week. And for more on what we could see, let's bring in Paul Goldberg with Bloomberg Intelligence. It's good to see you. Thanks so much for joining us. So we'll get started here. You're saying you're expecting modest revenue and earnings growth from most banks this week. Is that right?
Yeah, that is correct, Lindsay, and thank you for having me. So we, at a medium for the 6 banks, we expect about 5% revenue growth. The earnings could be a little bit better, maybe about 7% at the medium, and we don't really see any particular surprises from an individual bank on the upside or the downside.
You also say you expect cost control to still be a key driver for most banks. Can you explain that in a little more detail?
Yeah, it definitely will be, and this is what's driving the earnings growth slightly better than the revenue growth. All the banks went into the year with their promise of maintaining the positive operating leverage. So that will be a key. It might be a little bit of a challenge in the first quarter as a bit more expenses are coming in, but their guidance and where they are in the quarter is definitely going to be very important. I think they're going to keep their growth in the mid-single digits, I would say.
When it comes to loan exposure, what are you expecting in terms of loans to software companies in particular?
We've actually done some analysis, and the banks disclose things quite differently in terms of the segments within their loan books, but we do think those are fairly small. So for the entire loan book, including commercial and retail credit, it's probably less than 2% for most banks. For the commercial book itself, it may be up to 3%, but it's still very manageable.
What are some of the other, apart from that, like other headwinds or other kind of obstacles, challenges that these big banks are going to be facing in the year ahead? Or do you expect them to be talking about in these earnings reports coming out this week?
We think the loan growth and the economy and the exposure to trade uncertainty, those probably still going to dominate the conversation. Loan growth, the banks kind of guided to mid-single digit growth, in some cases a little bit better. It might be mid-single or even a little bit softer in the first quarter. So people are still kind of shying away from a lot of activity. January home sales were not great. They came down a little bit. So there is a lot of pressure on the loan side, both retail and commercial. That's definitely going to be a thing. In terms of trade, obviously, there is trade developments here in the U.S. that, in fact, might actually, for immediate purposes, reduce a little bit of a tax burden for Canada, maybe from slightly higher single digits to more of a mid-single digits, but not a very large shift. I think what we're going to have to wait for another 4 or 5 months into the summer as we get a review of the North American trade agreement. That's kind of going to be the key because that's what allows Canada to operate.
Yeah, big hurdle for a lot of companies. Okay, that's Paul Goldberg with Bloomberg Intelligence. Appreciate your time. Thank you.